All right. Good morning, everyone. Good afternoon, good evening, depending on where you're joining from. Welcome to another webinar series from Advanced Mobility. This time we are tackling the pertinent issue of financing electric mobility. We know that e-mobility is on the rise, but some of the challenges that we are facing in this space include the high cost of the equipment, the long delivery times from the manufacturers. We have uncertain retail values, especially if you're doing leasing. We have challenges also with the after-sales support. And I think even generally, EV awareness is quite low. And I think that is also driving most of the other challenges. So today we have a team of experts with combined experience, probably what this panel has almost 100 years of experience if we add myself and Robert, who should be joining. So apologies from Robert, who has some technical challenges, but he should be joining us shortly. I'm seeing we already 33 people in the webinar, so I will request that we have some introductions from the two panelists, just so we know who they are, where they're joining from, what they do, before we formally start the webinar. So I'll give a chance to Sylvia first, and then John. Just let us know where you're joining from and what you do in your different capacities. Hi, Sylvia, can you hear me?
Yes, Alex, I can hear you now.
Okay, go ahead and do your introduction, and then John will come later.
Okay. Thank you for this opportunity, Alex. My name is Sylviah Mwaura. I work as a senior associate under GreenMax Capital Group and also leading some of the e-mobility finance initiatives that we are doing. Just to give a small brief about GreenMax Capital Group is we are a group that's focused a lot on renewable energy financing solutions ranging from anything renewable energy, from mini grids to off-grid systems, as well as PUE. And right now we are very strong on the e-mobility focus. And one of the things that led us towards the e-mobility space and has been close to our hearts is when we realized that there is a need to come in and support most of this, at least to support the growth and accelerate this part in the sector. And what we realized was first from a supply chain solution. Through our market research, we realized that most of the challenges that this supply chain solution, most of these e-mobility companies faces, they'll have issues of high initial costs that they will be required to bring in terms of stock. They'll also be required to they have limited access to capital. Not many of the conventional financial institutions are ready to give them credit lines. And I think maybe because they have limited credit histories, with the financing of this sector is not fully been understood. And then, so there's a lot of skepticism from the end of the formal commercial financial institutions. So we've seen a lot of them warming up to this space, and we've started collaborating with them. Similarly, we also realize there's a very big logistical gap, because most of these products are being brought from, maybe they're being imported from either China or Asia, and they take up to 3 to 6 months to bring in the product. So that means that from the side of an e-mobility company, you have to make sure that you have enough stock to manage the sales up until then the next product is brought. And similarly, there's a bigger challenge where for you to get these products, you'll be required to maybe do like a 30% upfront cost and a 70 maybe, and pay up the remaining payment before they leave the port. So then this brought what we say one of our first products, and that's our Green Shift product, which is very strong on the e-mobility sector. And what we are saying is to tackle some of these challenges around the limited capital, this disadvantageous trade relationships where you're expected to do the 100% upfront costs, and also to manage that lengthy importation process. Then the question is, how can we come in and help? And we've been able to bring in a few partners on board. We have one of our trade experts who are Tradable House Africa, and they are coming in to support us in 3 key ways, and that's what we offer under the Green Shift Africa solution. And the first part is leveraging your capital, because we realize that you will be required to have a high upfront cost to make these orders. And maybe you only have, like, say, 20% of the cost. We are able to come in and see how can we be able to help you source this additional, maybe like 80%, to enable you to bring in the full package, especially depending on the orders. And similarly, this now helps with the cash flow enhancement, because then now when you're dealing with us as a trade partner, then you won't be required to make the payments once the products get onto the port. We can agree on maybe like a 6 to 12 month payment period, where it will allow the products to reach the country of at least the country or the port of where they are meant to be sold, and even make sales, and also give your customers that small trade credit, so that this allows that flow, just to create that flow that the customer, you don't have pressure on cash flow, so that you're able to also give it to the end customer. And similarly, we are looking at seeing how we can get maybe on board a few guarantee partnerships. It's still a full work in progress, to also come and work with the banks. And how we work with the banks is, if we are able to get, like, say, for instance, in one part, like a letter of credit to support that, we can come in and guide you on terms of how are we able to help you place this order, how are you able to do even the letter of credit in a way that supports you. This product is one of the key things, or at least this product, what it helps us is, one, making sure that as Sub-Saharan Africa, we are able to spur this and accelerate this growth in the e-mobility sector. We are able to make sure that the supply chain problem, some of the supply chain problems that are being faced, they can come in, that we are able to support that, and at least then make sure that we have enough products. Because you see, what's happening is, most of the companies, you'll say that I need to buy an EV, you're told you have to wait until it's being ordered. And that's what we are trying to kill, that to reduce that time lag in the gap. It now comes to the second part, and this is also one of our product offerings, is our Green for Access. And now this has also been driven towards, it's a blended finance, and it's been driven towards end user consumer financing, because then you have brought the products, but most of the customers are saying, no, these products are not affordable because of the high initial, maybe upfront cost that's been required. And what we are saying is, how can we be able to come in and support now both banks and financial institutions and the e-mobility companies to be able to leverage on this? So what we've done is, we have what we are calling a fast loss facility that's being offered to financial institutions, both the commercial banks and even regularized microfinance institutions. And what is then happening is, for you as an e-mobility company, once you're able to sign up, we will link you with also a good financing partner. And I think we have a few on board in this call. And so that in case one of your customers are able to come in and they say they want the product on credit, as opposed to you dealing with the credit part, then they'll go to the financing institution. Should the financing institution maybe then suffer a loss, they're able to claw back at least a small percentage, at least up to 20% of their first losses. And for most financial institutions, this is way above, this is quite above than what is the current default risk that they're currently facing with the other portfolios. And this then now helps, because they will also get comfort, and they'll also be able to start lending towards this sector. So I think maybe I'll do a quick stop there and just maybe allow questions. Thanks. Or maybe we could do questions after the other two presentations, Alex.
Yes. I think you went full steam, the introduction into the presentation, but I think that's okay. So thanks so much for that, Sylvia, overview of trade finance. So basically what I'm hearing from you is you are financing people who are bringing e-mobility products, not just the end customer. Is that right?
Yes. We have the product that supports the e-mobility companies to bring in the products to their area of marketing as well. Okay. Then now we have the end user financing with the product that was the last one that I presented on.
We'll appreciate more information, and we're also looking at the chat. So for the participants, we have a Q&A chat. Please feel free to post your questions there, and we shall have a joint Q&A session at the end. And then please also let us know where you're joining us from. We've seen registrations from across the continent, a few even outside. So please let us know who is in the webinar today, so that we're able to know how to structure our content better next time. We also need a bit more information from you guys. So I want to just run a quick poll on your screen. So the first one is basically from the about over 50 people we have right now. How many of you are working in the e-mobility space, or not in the mobility space, but are keen on it? So there's a poll running on your screen right now. Thank you for those who are participating. We are about a quarter away. We are halfway now. So I think I can close the poll in the next 30 seconds. Everyone should have had a chance to vote. This is just for information. I will publish the result on your screen just now. There's a few people remaining. We are at 73% of the participants. If we get to 80, that's a good number. Okay, that's good progress. Just clicking yes or no on your screen. How many of you are working in the electric mobility space right now as we speak? All right. So we can close it at that. Allow me to publish that result. I hope you can see it on your screen. So 70% of us are already in electric mobility in one way or another, 29 are not. Okay, so that's quite interesting. We are running a second poll. So for those of you, based on your understanding of electric mobility, which type of category needs financing more than others? If you have to get a chance to talk to our panelists today about financing, what would you want them to cover more? We have two-wheeler, which is basically bicycles and motorbikes. Three-wheelers is what we call tuk-tuks. Four-wheeler passengers is passenger vehicles. And then commercial vehicles would be buses and trucks. So about almost half of us have done that poll. If we can get to 80%, that will be a very good representation of the opinion of the participants. Okay, I think 10 more seconds before I close it. We are at 70% of the participants, so if we can get to 80, it would be good. There definitely seems to be a clear winner. I will publish that in the next 5 seconds. I'm really hoping we can get to 80% of the participants to. So if you've not voted, just click on any of the options, and then, okay, I think the 5 seconds are up. You should be seeing the results on your screen. I would see the results, Sylvia. Okay, so one last poll. Based on your understanding, what is the biggest challenge to EV financing? Is it the cost of the equipment, the interest rates, the uncertainty of the resale value, or the lack of awareness about EV within the financing space? Okay, thank you. The votes are coming in quite fast. Thank you so much. Not 5, maybe 25 more seconds. Okay. Okay, this one is going quite fast. So we're already at 65% of the participants. Good. We are approaching 80. Looks like this one we might actually get to 80%. All right. So Robert, Sylvia, and John, I think you can see where people are leaning towards as far as this discussion is concerned. I want to close this last poll in 5 seconds so that we just see what people think is the biggest challenge, and you can either agree or disagree with reasons. So let me publish the last result. So according to the participants in the room, the biggest challenge is the cost of the equipment, okay? Very interesting. So that challenge, I think, what does it say? Right now, we know that EV costs about 60% was the battery, but in the last few months, it has dropped as low as 40, and we expect in the next 2 years that electric vehicles will have parity with ICE vehicles in terms of purchase price. And considering that operation cost for EVs is much, much lower, then that will be the game changer period, basically, when we have that parity of purchase price between EVs and ICE vehicles in terms of combustion engine. So I think I will close that, Paul. I think we'll just jump straight to you, John. Welcome. Well, you're doing introductions, I think, I'm in the chat before the webinar. I don't know where you're joining from. So just let us know what you do, what's VAI Capital, and where you're joining us from today.
Pleasure.
Yeah.
Well, hello, everybody. And Alex, many thanks for this opportunity to speak. My name is John Tidmarsh. I'm CEO of VAI Capital, or founder. CEO for a small firm is too big a title, so let's just say I'm a founder. We've been working, our specialization is really the e-mobility sector and where e-mobility and renewable energy in particular meet. So it's energy and e-mobility. We're a Swiss-based investment firm. And to cut it short, we have been working for the past almost 4 years in the e-mobility sector in East Africa, working very closely with our partners VBD Automotive. I see that Nyaga Kabuchi is online, and I say hello to him, who are experts in the e-mobility sector with global experience. So what we are doing now is we're developing financial products based on our understanding of the needs of the e-mobility sector in general. So just as a heads up as well, we bring together 2 founding partners in addition to myself, one of whom is a Japanese national who has a $300 million assets under management renewable energy development and investment firm in Asia, and Michael Hidary, who is a family office, has a family office and is an expert. He has business also in e-mobility charging in the United States and energy efficiency. Probably enough as an introduction, Alex. I hope that's hits the mark.
Yes, that hits the mark, and you can start sharing your presentation.
Yep. Can you hear me now, and can you see anything on screen?
I can see your screen. I can hear you now. Please go ahead.
Excellent. Can you see the screen?
Yes, you're sharing your screen.
I can't see what you see though, for some reason.
We can see the first slide.
Okay, so you see investing in e-mobility. Perfect. Okay, excellent.
Yes.
Wonderful. So yeah, so very quickly, so I've introduced myself. What I'd like to very quickly speak about this morning is to give you an idea of the perspective of investors on the market for e-mobility in general, some of the barriers also to investment, and therefore what you might be able to expect from this situation, and then give you a very quick overview of some of the things that we're doing. I should have changed slide. Is that correct? Yeah.
Yes, you're on the content slide.
Okay, perfect. Okay, then it's working. So just to dive right into the characteristics of the e-mobility sector. First of all, the EV sector requires a lot of capital, and what we call asset heavy. This means that in order to deliver services, you need to invest a lot of money in assets. This is key in the financing sector, and we'll get to it in a minute. It's also all about energy. The E in e-mobility is very important because it indicates that this is actually an energy opportunity as much as it is an opportunity in mobility. And the third is that millions of people live from transport, which means it's a sector that's extremely price sensitive, and it's very important when you're developing solutions to be very careful about the reliability of the service and customer service, because this will be the secret to durable businesses. And what we've seen in many other markets is that people don't pay attention to this, and it does tend to spoil markets in general, but it's also the best way of failing. And finally, it's relevant to e-mobility, or mobility in any case is relevant countrywide and regional wide. So don't just look at urban areas. There are solutions to be invented elsewhere. So what? With regard to what this means for from a financial point of view, if you look at the fact it's asset heavy, this means that it's easier to raise money for a larger ticket. So when you invest more and you're asking for financing, the bigger the ticket size, the better, because it's less of an effort essentially for an investor. It's also, because it's asset heavy, it's easier to finance. Assets can serve as collateral, can be tracked and traced, so the risk is therefore lower. With regard to the energy play, the skill sets that are required to actually support the deployment of e-mobility already exist in territory. That's something which is also very important in terms of selling the opportunity to investors, international investors, is that actually those energy skill sets already do exist. And there is obviously a transition in terms of upskilling, understanding business models and how they fit together, but the basic skills are there. And this obviously increases investor comfort. And finally, the high impact of the sector means that donor capital is going to be interested, all the more interested, because e-mobility brings opportunity in terms of affecting positive impact. So those are all good things with regard to attracting investment. So moving on to the investment opportunity itself and the drivers of that opportunity. The first is really that in terms of an investor, you're looking at very high level assessment of the opportunity, is that there's a very strong business case. If you look at total cost of ownership on the right of the screen, there's a generic chart. If you own a vehicle and you run the vehicle and you're putting all the costs into it, you can be raising a typical number, could be in the 25% relative to a nice vehicle. So that's a very strong market driver. The second is that there is a huge capital need. And this, again, back to the point that I was making earlier about, it's easier to raise more larger tickets. And the slide just says there's a very large opportunity. And I think that speaks for itself. And we don't have time to get into any of those details. So I got a fly that keeps landing on my nose. So apologies. So there's a huge capital need. And the third main point is, again, the massive impact, whether it be in terms of emissions. That's obviously interesting to a lot of international investors, because obviously there are zero emissions from tailpipe on an electric vehicle relative to an ICE vehicle. But also in territory, what's most relevant is driver income increases. We've covered that. It can also increase access to energy, because productive use of decentralized electric generation, so mini grids, etc., can be used for e-mobility, for example. And then, of course, on the macro level, on the country level, it helps to balance the payments. So there are very significant drivers of opportunity. Those are amongst the most obvious. Let's speak a moment about some of the barriers to investment. And what I want to say, having said what some of the opportunities are, what are the barriers to, so why isn't the capital flowing? And to give you a quick idea of this is, it's a new sector. This creates complexity, at least in the mind of the investor, and results in reluctance to invest. Secondly, regulation as well. There's confusion, and the regulators are actually learning also in the process. And this can actually make even some sectors uninvestable. I haven't followed what's happened since last year, but it's quite interesting to look at electric bicycles. They don't have number plates. So actually, in an insurance point of view, you can't insure an electric motorbike, or you couldn't at the end of last year. So what does that mean is that it's uninsurable, and therefore, if you're an investor in the sector, that's a risk which you won't be necessarily willing to take. And the third thing to take into consideration is that companies are young, and the vast majority of investors are likely to wait and see. So they're going to wait until companies are less risky, and then they're going to follow. So, often people say that investors are sheep. That's a rude way of putting it, but they prefer to be followers, first amongst the followers, rather than those taking the risks up front. Just talking about different sources of capital, and why it's going to be why it is difficult to source capital at the moment. If you look at grants, there might be really impactful a sector, but there just aren't enough of them to meet the needs. And I think a lot of people have probably already seeing much greater competition in some of these grant funding windows. Venture capital, whether it is that providing equity or indeed venture debt, is expensive because it dilutes founders. So in an asset-intensive business, is it a good idea to fund your business with equity rather than debt? The faster you can transition to debt, the better, right? Because it means that you're less diluted, and the value that you're creating is going to be reserved for you. It's also a relatively limited source of capital, because there aren't that many funds around, and those funds that are around are only able to invest in sectors. They've got limits on geography, sector type, company type, etc. So there are limits. Debt investors, if you're talking about on the international level, there are limitations also on geography, sector, etc. And deals at the moment in the e-mobility space, generally speaking, are too small for them. And there are further issues as well around the fact that debt that's denominated in US dollars is still risky, especially around perceptions around foreign exchange and inflation. And then coming on to banks, and I'm looking forward to the comments of the next speaker. They tend to be wary of the sector, looking very much at the track record of investees. This is proper to banks. They tend to prefer more mature companies. I believe that certainly in Kenya until recently, and its interest rates, treasury bills are still stubbornly high, which means that banks are actually interested in generally speaking in favouring those kinds of investments rather than more risky corporate and younger companies. And it also means, therefore, that younger companies, especially corporates, are being priced out of the market in competition with these other sources of capital. Love to be challenged on these points, so I'm looking forward to the conversation, by the way. So quick word about the solutions that we're fielding, and I won't labor you too much on this, but we are building a first fund dedicated to African e-mobility. And this is really investing on the entire e-mobility value chain, so bringing growth capital to the entire value chain from the supply side, whether it be components, batteries, assemblers, and so on and so forth, or on the operations side, and also at end of life. So although there aren't any real opportunities that we've seen so far, those will certainly emerge, and probably faster than we think. We are putting together really expertise specialized in e-mobility. I've described that a little bit earlier, but we've got very significant e-mobility experience, energy experience, and debt experience as well. And we're expecting the launch in 2025, early 2025. Next slide. I wanted to share with you something which I think the market is going to be seeing much more of, and that we are actually piloting with donor monies, is the use of project finance as a tool to scale investment. We see this as a medium-term opportunity, but things that we're trying to prove out already now. A quick word about what it is that you take a fleet operator owner, for example, who cannot or will not spend what's necessary to make the transition to e-mobility. The assets you put into the investment activity and project development activity involves putting those assets into a dedicated company called a special purpose vehicle. And that SPV signs an offtake agreement with the fleet operator. That means the fleet operator pays as energy and vehicles as a service in this case. That's the basic financing model. Now, why is this interesting, and what are the advantages of this model? First of all, as far as the client is concerned, that there's no capex investment. And at the same time, because it's e-mobility, you're making savings, so reducing OPEX. For the investor, it's extremely interesting because it's lowering risk. As demand for energy for e-mobility, it's matched with the guaranteed supply of energy. So you know exactly what assets you're deploying to provide the energy necessary to power just what's required for those vehicles. It's also lower risk because those assets are deployed only for that project, which means that the risk can be carefully controlled by contracts and verified in due diligence. So why is this important? Because it will attract larger pools of capital that are unfamiliar with the sector and institutional capital that doesn't necessarily have or even have the bandwidth to actually develop the expertise of the sector, allowing them to understand the risks. So it's a very important tool for future growth. And just to give you, and I'm almost finished, I don't know how I'm doing for time, to give you a couple of use cases. One are corporate fleets, providing, and this model can provide energy and fleets as a service, vehicles as a service, but also charging networks for taxis, for example. And then beyond this, there's also the peri-urban and rural areas. And just as a word on that, we are piloting the use of e-mobility as a means to increase access to energy. And we're doing that with, well, you can see a bunch of logos, UK money, but also working with Sustainable Transport Africa, who's also closely associated with VBD Automotive, and Knights Energy, who many of you will know, and an English company called New Resource Partners, who are expert in energy provision. And to finish up, just to give you an idea of what those models kind of look like, that we're still really developing them. But the basic premise is that mini grids don't sell enough energy and therefore aren't profitable, because they might be selling 20, 30, 40% maximum of what they produce. And this is making them therefore unattractive for investment and unattractive to scale. But by building e-mobility projects that buy excess energy from grids, potentially they could be made more profitable and therefore more scalable, while also increasing the performance of e-mobility. Big hypotheses that we're setting out to try to demonstrate, but we see potentially a lot of potential on the market. And the picture just shows some mini grids, and you can imagine motorbikes zipping around between them and swapping batteries, for example. So now I do promise it's the last slide. The bottom line is that it's a huge investment opportunity. There are considerable barriers as well to raising growth capital. And we're raising a dedicated fund to address these barriers, bringing expertise to the table, which we believe will help de-risk the sector for institutional investors and family offices. And we're also testing this emerging project finance model and piloting it so that it can be part of the toolbox of investment methodologies and approaches that the ecosystem can start to work with to create opportunity for businesses, individuals, and obviously investors. So that's it.
Wow, thank you, John, for that masterclass in project finance from VAI Capital. I like some of the things you said, and I think some of the numbers I picked, challenges you're saying that most people in this space are looking for investments of at least $10 million, or that would be what, 1.3 billion or thereabout Kenya shillings. So I don't know how easy it is to put together that kind of a project, and I like the idea of partnering e-mobility with the mini grids so that they solve the problem of the excess energy being used for e-mobility. So I think we will come back to you with a few questions. For the panelists, please share your contacts on the Q&A or on the chat, where some people are already asking, and others are even asking about what are the periods, lending rates, and things, requirements if someone needs financing. So probably for the panelists, just prepare that information. As we jump to Robert from Kenya Commercial Bank, he needs to stand up for the local bank industry because I think an accusation has already been made that the banks are risk averse. They are more interested in government security. So I think, Robert, you need to take the stand and defend yourself. Robert, are you able to speak?
Yes, I am.
Okay. Are you able to share your screen?
Sharing is a bit. Sorry, I didn't hear you, Alex. Sharing the views or my screen?
Your screen. No, you can start with your views as well. Or do I help you with the sharing your screen?
I was purposely provocative, Robert, so I'm looking forward to your comments.
Right,
Yeah.
Robert.
Yeah. So I think in terms of just responding to that point around banks investing in treasury bills instead of the e-mobility, to an extent, of course, it makes sense because, ideally, if we look at the last infrastructure bond, it was going at 18.63. Yeah. So, and that's a risk-free investment. Yeah. So, of course, we always have those challenges internally within the bank, whether to deploy cash to such investments, because ideally there is no much that is required, just placing and waiting for a return. Then again, we as KCB, of course, we are quite intentional around the green space, given that we also have partners, DFIs, who are very keen on ensuring that even by the time we are publishing our integrated books of accounts, there should be a component on the green side of the business. So for us, we bucket our funding. Of course, it's more juicy on the treasury bills, treasury bonds. But then again, the bigger challenge is around competing in terms of pricing. Yeah. So in as much as we give discounted prices for e-mobility or green projects, there is always that challenge around the cost of funds, which of course even investors are looking for a higher return. So to an extent, it's a valid point. I won't speak on behalf of other banks, but for KCB, of course, we like encouraging the green conversation. Thank you.
Okay, Alex? Then yeah, you can proceed with your presentation. Maybe some of the answers are therein, and then we will have a Q&A.
Yeah, so I think since I've been having challenges with my network, I'm afraid that if I start sharing, it may disappear again. So I'll just take
the screen. Your presentation should be on the screen right now.
Oh, okay. Yeah, I can see it. Yes, now I can see it.
So tell me if you...
Yeah, so many thanks, Alex, and everybody else. Robert Mburu is my name again, and I'm the team leader asset finance in KCB. So I'll kindly go to the next slide. So at KCB, we have what we call our green journey. But that slide just captures who KCB are. We are represented in seven jurisdictions: Kenya, Uganda, Tanzania, South Sudan, presently DRC, Tanzania, Burundi. So we are fairly represented in the sub-Saharan area, and we boast of a huge customer base, 38 million customers, over 122 agents, and with a balance sheet that right now is in excess of 2 trillion. So I think we are fairly capitalized and well represented within the region. So we play a significant role in terms of enabling our customers meet their objectives from a business perspective, and we are also alive to the social impact around our foundation. So we have a very robust KCB foundation, and I'm sure you're fully aware where we have a Tujiajiri program. So for us, we believe in as much as you're making money, sustainability for us is key. And this also speaks to the conversation of the day, which is around e-mobility. So Alex, next slide, please. So KCB I'll just take you through a brief KCB green agenda on where we've come from and where we are today. We began our green agenda in the year 2008. At the time, I think there was not much talk in town around the green conversation, but we were quite intentional around that. So over the years, we became accredited under the Green Climate Fund, which was in 2018. So essentially what this means is that there was a partnership between Green Climate Fund, KCB, and the National Treasury. where for the tickets that are under the green space, whether it's electric mobility or solar, hydro, anything around green, they could be good candidates to benefit from these structures. But then again, I think and to the point that had earlier been raised in terms of ticket size, we face a bit of challenge in terms of getting tickets that can benefit from the Green Climate Fund, because for this one, the minimum ticket size is $50 million. Although we've had a pushback just to work on an aggregation of deals, whereby we have several transactions which now once we aggregate, we can do a concept paper, and then they benefit from the discounted prices, or rather discounted pricing from a loan perspective. Then, of course, KCB targets to green our book by end of next year to 25%. We're looking at a loan book of around 1.5 trillion. So 25% is quite ambitious. But I mean, this is just to put into context as to how the bank is intentional around greening our economy and the regions that we operate. Next slide, Alex. So I'll jump straight.
Percentage, what it is right now, the loan book? What percentage is green?
Sorry, I lost you.
I was asking, would you have an indicative percentage? What percent of your loan book is green right now?
Yeah, I do have, although it's a moving target, we are currently at around 12% of our loan book.
Okay.
So we're planning to double that or even much more, because when you talk about 25%, it's quite ambitious.
Yes.
Yeah. So I think I'll just jump into the e-mobility market. Mm-hmm. The e-mobility is, I think it's a growing market, and we're quite happy and excited about that. Some time back, I hosted the team in KCB. At the time, it had a membership of around 14 organizations who are the OEMs, infrastructure providers. These are the chargers. And I could tell the excitement and the upbeat around the room was quite positive. So I think this is quite good, because they've been working more around policy and getting the government to align, especially around the promises, lobbying EPRA to have discounted rates on electricity. So I think kudos to the leaders around the EMAC Association, with whom we work very closely. Then from where we sit as KCB, because we have visibility of how the market is moving, we've seen bigger penetration around the two-wheelers. I think this one has gotten bigger uptake. We also working with the UN body for especially training around drivers. We have good partnerships with the Mombasa Road, especially Mlolongo, where those circles, we've arranged them, trained them on many other things, from just the discipline level plus managing their businesses. So there's been a good conversation around the two-wheelers. Saloon cars, we've seen some considerable interest around the cab hailing companies, and we expect this to grow as time goes by. Then, of course, on the bus side, we have some OEMs who play in this category. Although the bigger challenge around the bus category is the huge upfront costs for buses. But then again, I think there's an expectation that as government moves towards BRT, there'll be bigger uptake around the bus space. So we can say that two-wheelers have had bigger penetration, then followed by the saloon vehicles, and then, of course, the buses. And we've seen very good embracement from the matatu space. Since we have visibility around the OPEX, we can confirm that most of the OEMs are struggling to even keep up with the demand around that space, because the day-to-day running is very minimal from a cost perspective. We are seeing upwards of plus 30% in terms of profitability, on a day-to-day. Although the bigger challenge around this has been the ownership, because for obvious reasons, they're quite skeptical around the second-hand market. But I think as as more units come to the market, then we expect that fear to fizzle out. But it's a good story. In fact, for us, we've partnered with the two main OEMs as KCB. So we have a working MOU in terms of just pushing units around that space. Then still on the market, I think there's been a keen interest from GOK, and I keep saying that it is a time that the market can grow is around this time, because there's a lot of focus and support around the government. In fact, the recent conversations were that a bigger portion of the vehicles that the police could be onboarding should be e-mobility vehicles, and that will be actually a part in the back. So it's a good, we actually in a good space in terms of market growth and penetration. But it's still very low, because when you look at the population of, say, like two-wheelers, there are upwards of around, say, 2.5 million two-wheelers in the market. But I doubt whether of that population, e-bikes are more than 3,000. So you can clearly see that the scope is huge. So I think for the investors, there's a big opportunity around this space. Alex, next slide. So I'll jump into the opportunities. When you look at the opportunities, I think the market poses a huge opportunity. The one that I would belabor a lot is around the government policies around tax rebates, where the government has been quite bullish around this space. Then, of course, there are state agencies that are working hand in hand with AMAC and a couple of OEMs in the e-mobility space, in terms of just trying to see whether the tariffs can be reduced. But the good story is that as much as the tariffs are at the current levels, there's still more profitability in the long run if you run an EV vehicle. Also, we've seen huge support from KPLC from an infrastructure perspective, and to them, this looks like the bigger growth area. So I think from a policy perspective and government strategic plan, they're quite intentional around growing this space. Then we've also seen an upsurge of opportunities from a regional level, because as I had mentioned, KCB has a rep office in Ethiopia. So and for most of us who are aware about the happenings, let's say in Ethiopia, is that they are going 100% on EV. I think because they have also some good generation of green energy from the huge dam that was constructed. So we're also finding that because of the favorable terrain in Kenya, a couple of companies are setting up in the special economic zones of Naivasha, just try to see how they can capture that market. So I think that's a huge opportunity for investors. Then also we are seeing increasing banks' appetite in the EV space. To a large extent, banks have been very skeptical around the onboarding these assets for obvious reasons. When something is new, of course, you expect a bit of pushback from the credit teams who normally review these facilities. But I'm happy to say that banks are coming on board, not just even mainstream banks, but even microfinances. Yeah, there's been very good uptake around the e-space and DFI support. We are being invited in very many engagements from the GTCs of this world. IFCs are very keen in terms of, number one, building capacity, and number two, just trying to see how they can de-risk banks from the emerging risk around the e-mobility. So I think what I'd say around opportunities is that the environment is very good, especially on the e-space. Uptake awareness is building, and it can only be better as we move forward. Next slide, Alex. So I'll move now to the challenges that the industry has been facing. One is, which has also been mentioned in this engagement, is around accessing of credit. I think this one has been a bit of a challenge, because you would find that, especially for the bigger units, the buses, initially the model was to sell to to off-takers. But then again, they realize that due to the huge upfront costs, you'd find that the financing is blended. In other words, the OEM leases the bus to the operator, saying it's PSV, and then they keep custody of the batteries, which accounts for around maybe 3 times the cost of the body of the bus. So you find now from let's say an insurance perspective, it becomes quite difficult when you say who the first loss payee is in the event of total write-off. Then that poses a challenge. Yeah, so these are conversations that we keep engaging with the credit teams. Then still around access to credit, high cost of credit, which I think we've just discussed a while ago. And the other item is loan to value. So you'd find that for your standard ICE vehicle, the banks will even finance upwards of 95%, when there's a promotion, but the thumb rule is normally 80% financing and 20% deposit. But for the EV, some banks are even asking the customers to contribute upwards of 50%, which becomes very difficult, especially given that if you say look at say a bus which could be costing around 20 million, 50%, 10 million upfront, that can be quite prohibitive and is a significant barrier to acquiring these assets. So that has been a challenge. Then also we've seen barriers to entry around high setup costs, and this is significant given that most of the OEMs in this space are startups, and as you can imagine, most startups have setup costs, which when you couple up with the high cost of acquiring the e-vehicles, then it becomes a bit of an uphill task just to set up those outfits. So this has been a challenge. Then in addition to this, given that most of them are startups, then the after-sales support, which the banks are very keen, because it's one thing to sell an asset, but the other one also to offer the technical support. So a question would be asked that, let's say if it's a bus and it's been ferrying passengers and it's stuck up in the middle of the road. Yeah, you wouldn't expect any roadside mechanic or electrician to just come in. So there's an expectation that and this is actually tied to credit access, because you would find that appraisal of a facility is directly dependent on the customer's ability to generate income. Yeah. So if that bus is stuck and it can't be supported, then you can imagine what that means to that loan. Yeah. So because the customer won't be able to repay that debt, and by extension, when you look at the bank's book, then the non-performing loans can easily start deteriorating, which is a challenge. And the other item is around poor publicity and awareness. I think we all privy to a good example was sometime last year when we had challenges in Mombasa. You could find that I think it rained and the motorcycles there were not able to navigate through the water. In addition to that, I think there was information that they could also not be able to move through hilly terrains. And now such information can be very detrimental for the industry. So I think from an awareness perspective, I think these are challenges that we keep experiencing, and this normally waters down the many gains that from a banker's perspective, it's really not very good. And even from a client's offtake level, that can pose a challenge. Then technical performance, which is closely linked to that aspect, because sometimes we get feedback from the off-takers, especially around the bike space, that there's normally a promise from the OEM that, say, a bike will do 80 kilometers, but then again, when the riders give us feedback, they tell you that it's only doing, say, 60, 70 kilometers. That's a bit of a challenge, and it speaks also to the warranties that tag along with the bikes, or maybe the batteries. So and I think that's why maybe, of course, Alex, with your organization and the good work that you're doing around the technical space, it's for bankers to get more confident and put in more money. they will require bodies that can give technical reports around the numerous OEMs that are coming on the market, so that there's a professional opinion around, say the performance of any asset, because this can negatively impact and impair a potential repayment record or projected income due to performance. Then I think I mentioned around insurance. I won't go further on this, although there's a bit of challenge in terms of insurance companies or underwriters that are willing to onboard these risks. But I think for the last 6-7 months, we've seen 2 or 3 underwriters keen on coming on board. But this was a pertinent challenge, given, number one, most insurance companies didn't have the capacity to underwrite these risks. Number two, there was that fear of new technology. But we're seeing more and more uptake. So we expect this to improve as we move forward. And then, of course, charging infrastructure. Now this has been quite significant, given that most of the players they struggle from a capex perspective, setting up, bringing all these vehicles quite expensive, having the charging points. So this has really posed a big challenge in terms of uptake of e-mobility. So I think, having said that, what maybe I can say and summarize from a bank's perspective, and now I'll speak not now on behalf of the industry, but on behalf of KCB, is that we are quite keen in terms of support the industry, and that's why we are quite happy attending such webinars just to engage. But then again, there's still a lot of work to be done, and this one I'll call it a marathon. It's not a sprint, because everybody has to come on board, and the way we look at it is from a bank's perspective, so that we can be able to mitigate this risk, is to look at it as an ecosystem. In other words, we look at it from an end-to-end, from the OEMs importing, they should be on board, bankers should be there, putting in their best foot forward. We will be happy if DFIs will come in, and also the impact funds that are coming to accelerate the industry. Then also, we also encouraging microfinances, especially those ones that are quite versatile on the downstream, especially on the two-wheelers, because the market that they serve, commercial banks might really not be able to be as nimble enough. So I think as the tickets become bigger and bigger is when now the commercial banks come in. So it's a nascent industry, and I would say that the industry is experiencing a good problem, because the good problem is all about demand. There's big demand around the EV space, and the OEMs are actually struggling in terms of meeting that demand. Because today, if you speak to many OEMs, they'll tell you that, for example, they'll tell you a bus, for you to deliver it, is within 6 months. So you find that it's a bit of a challenge around bringing in stock here. So if the entire industry works, of course, with the government and the good policies that are being implemented, then I can say this industry, in terms of saturation, we are looking at a bare minimum 5 years. So there's scope for growth, scope for everybody to make money. And KCB is happy to be part of this engagement and conversation. So thank you, and ready to take up any questions that might come my way. Thank you.
Okay, thank you, Robert, for that nice dissection of the challenge around financing and the progress that a lot of organizations in government, including the Treasury and the National Police, EPRA, KEBS, KPLC, are working together to remove some of those challenges. And the example you gave of Ethiopia, which is one of the governments in Africa which has been really aggressive in adoption of electric mobility. So I'd like to ask the panelists to look at some of the questions on the Q&A chat. I'm seeing we have people who joined: Marwa from Tanzania, Evans from Panda Mobility. Sylvia, you may need to put your contacts. Sylvia, Robert, and John, please put your contacts on the chat, your email and phone contacts, and the name of your organization. I think some people missed Sylvia, GreenMax Capital. Seeing Abubakar from Department of Transport, Felix from Feru Energy in Rwanda, William from Ghana. I'm looking for some questions. Francis Gordon, So someone had asked here, Sami, about lending rates, how much capital. I think, Robert, probably you can mention how much capital you can finance. John had mentioned the ticket sizes. Sylvia, maybe if you have some information around the amount of funding available and the conditions. The presentations, we will share them after this. By tomorrow morning, you will get the presentations from the two panelists. Interest rates on loans, I'm looking for. Yeah, thanks, John. I think you've put in the name of VAI Capital website and your LinkedIn contact. So I think we can take some closing comments from the panelists based on the feedback that we've seen on the chat, starting with Sylvia. Sylvia, I know we've run out of time, so just 2 minutes max closing comments regarding the feedback and also the discussion that has been going on.
Okay, I think, thank you all. I've just posted our contacts as GreenMax Capital Group. And I think, as both John and Robert have said, and you also mentioned it in the start, this is a very big space. It's a very exciting space. A lot of growth, a lot of support is coming from interested parties, not only from government, but even private entities. And we are out there to see how best we can support. I know, and maybe this can be echoed by both John and Robert, is we are also very open to hearing what other products that may be able to come in and sort out this problem towards, so as we can see this acceleration on the e-mobility sector. Because that's one key thing that we would hope, because you see, Robert has set his targets, but for him to get his targets, we need the companies on board. So what best can we be able to also come in and make sure that we can accelerate these products? Yeah, thanks so much, Alex, as well, for organizing this.
Okay, thank you so much, Sylvia Mwaura from GreenMax Capital. You can check out their contacts online. Before we go to John, probably one of the things which we need, even as we're looking for the numbers, because it's expected that EV sales will be about 50% of global vehicle sales by 2030. So of course, anyone in finance doesn't want to miss out on that. And I think some of the current gaps we are seeing are being met in informal ways. We have what we'd call the unregulated lenders who are very strong on, those microfinance schemes, motorbikes, phones, which the interest rates are quite high because I think that's how they price the risk. And then I think also we found out that there's also a segment which people call boss lending, where personal investors buy, let's say, a two-wheeler, give it to a rider, and expect a daily fee. Those are some of the ways that people are trying to plug that gap. So probably, John, you can give us your closing comments. Thanks for sharing your contacts.
Well, thank you very much, Alex, for organizing this, and for the other panelists for their comments and insights. And I think the only way the first thing I'd say is that it's always going to take longer to get the financing lined up at the scale that's required than entrepreneurs are going to hope. So I guess that just as a sort of a general comment, it always takes longer than one would want, but the opportunity is huge, and more capital is going to be coming in. I think we need to absolutely find ways of de-risking perceptions of risk and real risk as well, but it's a lot about perceptions, and that's why products are very important, because investors, when I say product, it's an investment product. It's a way of de-risking the investment in the opportunities on the ground, and that's what I think all of us around the table are trying to do in different ways. I just encourage anyone looking for capital to shop around and to shop around, talk to as many people as you can. At the moment, there aren't that many. We can only hope that there are going to be more. But again, I think we're all very keen on collaboration, and thank you again, Alex, for your role in bringing people together.
Thank you so much, John. Before we listen to Robert, William had raised his hand, so I'll just give him a chance to make one comment on behalf of the rest of the participants. So, William, you can unmute and share your comment or question. William Achiampong. That sounds like a West African name, if I'm not wrong. Yes?
Yeah, I'm from Ghana, West Africa. Yeah, also, I'm kind to people to some partners to start an EV business in Ghana. And we some challenges where we import these bags into Ghana and we face high duty on these bikes. You bring it to the port before you clear these bags, and it's a whole lot problem. Like it's a lot of problem you're going to go through to clear these bags to be able to use them. Now here is the situation where we are trying to create an eco-friendly society and eco-friendly environment. We are trying to help out the youth get jobs by giving them these bags to work and fund their education at an affordable price. But if we are facing the issue where we import these bags and we are facing high interest rates and high duty, it makes us difficult to do that. So we want to find a way around this. How are we going to find a way around reducing this interest rates and duties on re-importing these bags into Ghana, or even in Africa in general?
Wow.
Thank you.
Thank you so much, William. I think that if I can answer part of that question, the initiative has to start from the mobility industry. Some of the studies that have been done through the Electric Mobility Association of Kenya have shown that, number one, oil is our biggest cost, and this is similar across most countries on the continent. We are importing over $500–600 million of fossil fuel every month, which is also the biggest reason why we need foreign exchange. So the studies by EMAC have shown that if we have aggressive policies to promote e-mobility, not only will we save on that foreign exchange, we'll actually have a net benefit to the economy. Yes, I know also oil has big taxes, but if you look at the support that would be given to e-mobility in terms of duties and waivers on taxes, like what the Kenya government wanted to do, the lost revenue on fossil fuel taxes, but the benefit to the economy in terms of foreign exchange savings, then the net benefit for Kenya alone, I think, is on an average situation, not too optimistic, not too pessimistic, was in the range of $400 million a month in 5 years once we start adopting electric mobility. If you look, there's a part of John's presentation where he said the big driver of electric mobility is balance of payments. So that's the part of how much, is being paid out to bring in products versus what we're able to sell. And the biggest import cost for most African countries is oil. So that's how that comes into play. But a lot of awareness is needed to governments, to state agencies, to the national assemblies or parliament, so that they put policies which are pro-electric mobility, because like the presenter said, it's about energy, it's not about vehicles. This is a change which is about the energy security of a country. So I think I will ask Robert to make his final comments, responding to some of those questions, and then we can close the webinar because we are so much out of time. Robert?
Yeah, so I think before I make my closing comments to our brother in Ghana, and just in addition to what Alex you've said, it's the strength of the association. Number one needs to be there, where you set up an association which primarily works around lobbying this. And number two, when you look at most of the African countries, especially like last 2 years since COVID, their currencies have really faced a lot of depreciation. Yeah. And I'm sure, I don't have the statistics around Ghana, but I know Nigeria depreciated by 100%. Kenya, we all know what happened. So if there's this drain, most of the African countries are coming to the awareness that we need to have economic drivers that forestall that bleeding of foreign currency. Yeah. KCB, of course, as you might know, we've been facilitating the imports of oil for the country. We are not very happy about that, especially when you're discussing oil and you're in an e-mobility session. It's not a very good thing. But then again, because of our balance sheet, the government requested we come through so that we ensure oil is available. So you'd find that every month there's an outflow of $500 million worth of foreign currency. Yeah. And remember, the key drivers of foreign income in Kenya are diaspora and tea. Yeah. So if on one side you're having these hard-earned foreign currencies coming in, and then every month you're draining to that tune, then I think it's a very sad conversation. That's why you're seeing our FX reserves depreciating at a very fast rate. So the Kenyan government has come to that awareness, and that's why they are very intentional around, especially, in fact, if you look at duty, if you import the kits and you assemble locally, it has very many benefits because number one, those kits come and you do local assembly. So those are jobs already created. That's number one. Number two, there's also a lot of FDI coming in, foreign direct investments, around those factories, which is happening, and we have that visibility. Number three, there's impact money that comes. I mean, sure, John spoke to the impact money. So I think once let's say as an association in Ghana, you have that thinking and a lot of lobbying, then definitely you will get your way. So now coming now to my closing remarks, maybe I'll address the issue around pricing, because pricing, I think, it's a very thorny issue. Although when I looked at your poll, Alex, the bigger conversation was around high costs of equipment. It was not even pricing. So I think the bigger hindrance is around acquiring this high cost of equipment. And I think you also spoke that as we become more and more efficient from a battery perspective, those costs are going to definitely go lower, given that they'll be more efficient. And of course, there's a lot of demand for minerals. When we look at the region and the minerals that are going towards building the vehicles, of course, there's a lot of movement. So pricing, like right now, when you look at our base rate is at 15%. So it's normally 15 plus a margin. But for the EVs, we normally put a conversation where we don't work with the commercial rates, where we give a discounted, say 100 or 200 basis points lower than the existing rates, just to encourage the EV conversation. So I think if we get those requests, we're normally treating them with softer gloves, in addition to just being a bit flexible when you're looking at the financials, because most of them won't have financials for 3 years. And even if they did, you would find that they're still not returning a profit. So for us, we're just trying to skew our policies just to accommodate the EV customers. So at KCB, we are still, in fact, I've been challenging other banks that it's been a bit lonely for KCB, because most banks are a bit skeptical around EV and the financing of EV. But for us, we've taken a bullish approach, because we've said that if we don't stand up to be counted, then who will? And being the biggest bank in the region, we've taken up that challenge, where we try to work closely with everybody in this ecosystem. In fact, currently we've also partnered with the Matatu Owners Association, and also with them we've plugged along the OEMs in the EV space, because remember, like the OEMs are projecting to have 1,000 buses on the roads in the next 5 years. Each bus costs 20 million. So you can imagine the opportunity there. 20 million Kenya shillings times 1,000 buses. That's huge. Yeah. So I think we're in a good place. And what I can encourage, and maybe I'll repeat for the umpteenth time, is that we're in a good space. If you want to make money, be in the EV space, work with the specialists that are in this space, just to help you as to how you put together your proposals. Alex, I think you're also doing a good job in terms of building capacity. The banks are there to support.
You're breaking.
Am I break? I am. Am I now audible enough?
You're audible now.
Yeah. So I think also partners like John here doing a good job in terms of just putting together those deals. Sylvia, we also work closely with her because she does a good leg of bringing them in, and then the local banks takes over as we do the last mile. So I think for me, I just want to thank all of you, Alex, for putting this together, and I'll be happy to attend many more. but feel free to engage after this. Asante sana.
Thank you so much, Robert. I think as we conclude, we just like to emphasize that the main reason why we are moving towards electric mobility is climate change. We know that's the defining struggle of our lifetime. There's health implications that we lose more people to, transport and air pollution than even road accidents. But ultimately, most people will transition to electric vehicles because they are having an economic benefit, which is a lower cost of ownership. So that's what we do as Advanced Mobility. We help fleet operators, people in e-mobility, with training and consulting solutions around the same. And in fact, the common thread among the panelists is that there's a very low awareness on EVs. If you look at some of the previous in-person activities we've had, we see less than half of the group has even test-driven or been carried in an electric vehicle. So the awareness bit alone is, in my assessment, more than 80% of the work. Even before we craft the solutions, people will not, develop an ecosystem for a product which they are not even aware about. So I think for all of us in the industry, that's what we need to arrange. And as the mobility, one of the things we do is we carry out training around electric mobility. It was actually supposed to be running this week. It's on the screen right there. We partnered with the Kenya Power Training School, but we've postponed it to the last week of July, the week of 29th up to 3rd August. That's when we'll be having this technical training for people to be able to understand mobility from a deeper perspective, which this includes even disassembly of an electric vehicle and reassembly. We visit several e-mobility farms so that people can understand that this transition is happening now. It's not for the future. It's happening now. And if you miss the boat, then there's going to be a lot of industries which will be shaken, and only the ones who are able to adapt will be able to remain relevant. So please contact us on our online or other contacts where we can be able to share more information about our programs. And I think we'd just like to thank everyone who joined us from around Kenya, from around Africa, and from around the world. Thank you so much, Sylviah Mwaura from GreenMax, John Tidmarsh from VAI Capital, and Robert Mburu from Kenya Commercial Bank, and all the participants. We know probably we didn't answer all the questions, but I think this is not the end of the discussion. We'll be sharing the presentations on email to all the registered participants, and we'll also upload this video to YouTube probably by the weekend on Advanced Mobility TV. That's our YouTube channel. Otherwise, thanks so much. Everyone was able to participate. Sorry, we've really exceeded time, but I think the topic had a lot of meat to chew. Would like to wish you a wonderful day, and probably we can just end by showing you a video of one of our previous trainings and the technical trainings that we've been carrying out. Otherwise, thank you so much for joining us. I hope
Advanced mobility is what Africa has been waiting for. Advanced mobility is what Africa has been waiting for.
All right. Thank you so much, ladies and gentlemen. Catch you at the next webinar. Just watch out on our social media handles. We'll keep communicating. Thank you. Good day to everyone. Bye-bye.